I'm going to show you exactly how to get consistent returns on your trading this year, next year, every year, here on out. So the first thing to get consistent returns is you need a high win rate. Okay, that's extremely important. So this is a strategy that I use. I'm going to show you step by step exactly what I do. So you want to open up a futures watch list with options available to trade on them. If your broker doesn't display this watch list automatically, copy these tickers, make your own custom watch list. The important thing is you want to have IVR, which is IV rank, on your watch list. Order everything from high to low IV rank. And then what you want to do is simply pick an underlying to trade that has an IV rank of over 30. So in this instance, they all have an IV rank of over 30, except for these four at the top. So we've got a pretty big selection that we can choose from. Now, the exact underlying that you pick is going to depend on things like the size of your account. If you have a smaller account, things like lean hogs might be good, bonds might be good, wheat might be good, currencies, soybeans, etc. These kind of things are good for smaller accounts. Something like crude oil, you're only going to be able to do something in here if you have a larger account. But it will just vary depending on the size of your account. So we're going to go with natural gas. I love natural gas. Really great premiums right now. So once you've selected your underlying, it has an IV rank of 67. You want to open up a list of option expiration dates, and you want to pick one that's between 30 and 60 days out in time. So there's one here, 41 days away, May 27th, that we're going to open up. And now what you want to do is simply just take one side of the trade. Normally we like to take both sides of the trade, but if you are new, if you just want to get some wins under your belt, then just take one side of the trade, keep it really simple, and we're just going to take the put side, okay? We don't trade based off of technical analysis or anything like that, but as you can see, natural gas has been beaten up over the last couple of months. So, we are going to take the small directional assumption that price will either kind of stay where it is, move higher, or not move too much lower. Okay, so what we're going to do is we are going to sell a put. Okay, and now the reason why we sell a put instead of buying a put is simply because of this. So let's say if we were to buy this put here at 2.6, we would need price to move well beyond, or well lower than what it is now. So price right now is at 3.27. We would need price to go lower than 2.6. Okay, and then we can start making money. Now, if you look in the bottom left, it says POP, which is probability of profit. That's 16%, which means you're only going to win 16% of the time. Okay, now if we were to sell this contract instead of buying it, watch what happens. So now our POP is 84%. It's the inverse. We are taking the other side of the trade. Okay, now so if you have a look in the bottom left here, if you were to just sell this as is, and the reason why we've selected 2.6 is because it's at around a 10 delta, and this is going to give us a very nice and high win rate. Okay, so if you look at the numbers, we would collect $400. We have a max loss of 25,600 and a buying power requirement of 1,400. Now, if you know how to manage risk, if you know how to make adjustments, if you know how to roll, etc., you don't need to worry about this max loss. However, I'm just going to assume you don't know that stuff, or you don't want to do a naked position like this. You want to have a sort of defined risk. Then what you can do is simply just come a little bit further out, a couple of strikes out, and you can just buy another contract further away. And because it's further away, it's always going to cost less than what you're collecting in premium on the short contract. So you're always going to end up with a net credit, as you can see here. So in this instance, what's happening? So we're short the 2.6 and we're long the 2.45, which is going to give us a net credit of 0.015 per share. Okay, so what that's going to translate into is a premium of $150 that we collect upfront. We have a max loss of 1,350 and a buying power requirement of $300. Okay, now this max loss of 1,350, this is your max loss. Okay, max loss. This does not mean that every loss is going to be this high. Okay, this is your worst case scenario. So when I've had comments in the past on the videos where people are trying to calculate profitability using this max loss, and the critical mistake they make is they assume that every loss is going to be the max loss, which is just not the case. This is just your worst case scenario. Okay, so you're going to collect 150 up front. Your buying power requirement is going to be $300. Okay, and you have a pop of 83%. That's if you hold until expiration, which we're not going to do. We want to get out of this position at 50% of max profit, which is going to be 50% of this number here, $150, which means we would get out at $75 of profit. Now, because we're going to be getting out early, your win rate actually goes up. So for equities, your P50 number, which is the probability of hitting 50% of max profit, is displayed for equities, but for futures it isn't. But basically your P50 number is going to be about 10 to 15% higher than your pop. Okay, so we're going to have a P50 of over 90% on this trade if we get out at 50% of max profit. If we get out at 25% of max profit, your win rate is going to be even higher, and we're going to be getting very close to the 100% mark. Obviously, it's not going to actually be 100%. No strategy has a 100% win rate, but you'll be able to get as close to it as you possibly can. Okay. If you want an even higher win rate, you can just, move everything even further out. This only really works for futures because it's your buying power requirements calculated based on span margin. If you were to do this with equities, you really just wouldn't be collecting enough premium in order for this to work. Okay. So you can play around with the position, make it fit inside your portfolio. Speaking of which, you do need to control that very carefully in accordance with your max loss and your buying power requirement. And the way to do that is as follows. So if you go into the description of this video, there is a free position sizing template link. Click the link, it will take you to the spreadsheet. You enter in the size of your portfolio, you enter in whatever the current VIX level is, and all the information is going to be calculated for you. It's going to tell you exactly how you need to structure your portfolio, how much buying power to allocate to your positions. And these numbers do change dynamically in accordance with what the VIX is and what's in your account. So as long as you're sticking to this over the long run, you will be absolutely fine. You won't have any worries. If you do want to learn in more detail, click on EDS Premium, get yourself signed up. You will have access to this exact portfolio that I'm showing you here. This is a live portfolio. We've had 3 trades on this week. Every single trade has come through. This is a very small portfolio, and it's deliberately a small portfolio so that anyone can basically join and make money with the trades that we're doing, basically. And if you have a larger account, by all means, you can scale up. So you'll get access to that. There's a full course, so no prior knowledge is required. We'll teach you everything you need to know. It's a private community, so if you get stuck, you can speak to myself, speak to other people that are already inside. There's also a 100% money back guarantee. So once you have been through the course, follow some of our trades, if after 6 months you're not profitable, we'll work with you for free until you are. So it's completely risk-free. It's $9.99 a month to join right now, and the price will be going up. But once you're in, the price is locked in for you for life, so you are rewarded for getting in early. And the aim of EDS Premium is to teach you the skill. It's not to keep you dependent on us. It's to give you the skill. Once you've learned it, no one can take it from you, and you've got it for the rest of your life. And we aim to get you to that point of where you are self-sufficient within 6 to 12 months. So with that being said, I will see you guys on the inside.